love the channel and find it useful in becoming a happy retiree. Subscribe today. David, good morning. How can I help?
Good morning, Wes. Thank you. Similar question, I'm only 5 years away from retirement, but I am 100% in stocks, and it's through the TSP.
Okay, so here's what David... Interesting. Okay, so David, you are only 5 years away, and again, for our audience, just to a quick refresher, if you don't know what TSP is the Thrift Savings Plan, and you're a government employee, I would suspect. Yeah. So if you're a government employee, for those listening, the Thrift Savings Plan, also referred to as TSP, is your version. It's the government's version of a kind of a big national 401k plan. And it's interesting because it's this giant plan, but it's really only there are only 5 investment options. Pretty much, yeah. It's CSI, which is easy to remember because of the crime scene investigation show, but C stands for common stock, so basically a large cap fund, S is a small cap fund, and I is their international, and then GF are the government fund and the fixed income fund, both bond funds, and that's it. That's all you got. And that's okay because they're good low-cost indexes that give you the main areas of the world to access. Your question, though, David, is that, hey, look, I'm only 5 years out, and you're worried about maybe being too aggressive. Tell me your allocation again. How much do you have in CSI?
The large cap is about 60%, and then 20/20 in the small and the international.
Wow, so you're 100% in equities.
Right.
Okay. And
that's why I was wondering if it's time to start moving.
Again, okay, so similar answer I'm going to give you that I just did, that we just talked about, except the big nuance here is that you're much closer to retirement than our last caller. Our last caller was 15 years before he was ever going to touch his money. You're only 5. Here's this is what I'm going to tell you.
Well, now this might throw a little something in it. I'm also contributing about 70% of my salary to TSP currently.
Wow. Okay, so you're kind of in that super haymaking phase where you're really saving right now.
Right.
And I would say this again is during these pullbacks, during these corrections, and who knows how long these things last, right? I mean, they've gotten so much, the cycles that we go through in markets have gotten shorter and shorter seemingly, where correction happens in days, not months. The rebounds are quicker too. Who knows when we do start to rebound? Who knows if the rebound takes a week or two, right? So we don't know how quickly this correction stops, and then we don't know how quickly it will heal itself. But we do know historically that these corrections or these downdrafts, they do end, and then we do recover. So now is not the time. So to recap for our audience, CSI, those are all stock-oriented funds. You're 60% large cap, 20% international, 20% small. You're 100% in stocks 5 years out of retirement, which is a little aggressive in my opinion. However, now during this correction is not the time to sell stocks to get more conservative. So what I would do, this is my thought on what I would do if I were in your situation. I would wait until we recover. That might be in 3 weeks. It might be 3 months. It might be 2 years from now. I don't know. But I would be patient because you still have a full 5 years. I would be patient. Wait till we recover, David, and then I think it's time for you to dial back the risk. And that would be, of course, adding to G, adding to F, the government fund and the fixed income fund. Those are very stable. They pay a little bit of interest. And by the way, slightly higher interest now because rates are going up, interest rates are going up. So the G fund is going to pay more now. The F fund, as in fixed income, is going to pay more. So when we do recover in the stock market side of the equation, I think then it's time to look at some sort of balance that would look, as a guide, the life cycle funds are a nice proxy for balance. If you look at the life or the L 2030 fund, it has 32% G, 6% F as in fixed income. It's about 40% in fixed income or safety. The other 60% stays in CSI, which is the stock side. That's the kind of allocation David, that you want to look at or probably fully consider or consider more heavily as you're getting closer to retirement. So I wouldn't do the rebalance now because you're already all stock. You don't want to do it in the middle of a correction. But when we recover, then it's time to start to get a little bit more balanced and a little bit more conservative. Hi, I'm Wes Moss, and thanks for taking a minute to hear about what's so different about my new book, You Can Retire Sooner Than You Think. So unlike other retirement books, this book will give you a step-by-step guide, whether you're in your 20s or 30s or 40s or 50s, to learn from what these successful and happy retirees did to get there. I hope you enjoy the book, but more importantly, I know that it'll help you retire sooner than you think.